Well, good morning, everyone, and welcome to the third in our series of Life After Lockdown webinars. And hopefully you can see on screen the title of this morning's presentation, which is Predicting the Unpredictable, a Charity Special. And our presenter this morning is Anne Hallowell, who I'm sure many of you already know, who is our lead partner on the charity and not-for-profit sector. Anne's been with UNW for the last 7 years, and for the previous 7, she was actually on your side of the desk, or perhaps I should say your side of the screen, because she was the in-house finance and business manager for a local charity. So she has very real practical experience of being at the sharp end and having to deal with pesky auditors and other professional advisors. And before she was actually working in the charity sector, Anne had more than 16 years with PricewaterhouseCoopers, where she was part of the firm's national charity team. And she was also one of the first people in the country to gain the diploma in charity accounting when it was first introduced. So we've been delighted to have someone with Anne's experience and expertise at UNW heading up the charity side. Now, those of you who attended previous webinars will know there are a couple of housekeeping points. If your fire alarm goes off, I imagine you'll be able to find your own way out of the house as quickly as possible. And if your mobile phone goes off, we won't hear it. However, if you look at the bottom of your screen, I'm hoping you will see an icon saying Q&A. And if there is a question that you want to ask during the course of Anne's presentation, if you'd like to click on that and type out your question, we'll endeavour to answer it at the end. And also there's a separate icon saying chat. And if you encounter any technical difficulties, you can put a note on that and one of our technical team will pick that up. So that's all there is for me to say. I'm now going to attempt to disappear off your screen, and Anne will do the presentation.
Hi, welcome everybody, and apologies for the technical hiccup at the start that meant you lost the first slide. So welcome to today's webinar, which is the first charity one we're doing in this series at Life After Lockdown UNW webinars. Thank you to Charles for the introduction and the housekeeping. As you can probably tell from the weather outside your window, I'm not actually outside City Gate, but working from home like many other people, whilst trying not to show the entire world the pile of ironing in the corner of my room. It doesn't create all that professional impression. So what we're going to look at today is some of the issues and considerations when trying to predict what the future might look like for your charity and how to tackle flexing the plans to ensure you are able to react quickly to an ever-changing situation as quickly as you might need to. We're then going to look at the current pandemic and emerging from it and how that might challenge your established government arrangements, what you and your trustees could be doing differently. We'll finish off by looking at some of the challenges now facing charities looking at financial reporting for the year to March and other year ends as we approach them, the types of things you should be considering when writing your trustees report. So just to put it into context, it is always very difficult to generalise about the charity sector, and the impact of the current situation is no different. There are obviously charities that have been overwhelmed with demand, such as food banks and other frontline charities. They've already had to react really quickly to recruit and train more volunteers, issue fresh appeals for help, and apply for the myriad of different funds that were available in late March and early April to try and upscale their services and react as the situation unfolded. At the other end of the spectrum, there are also a raft of charities that have had to close overnight and don't yet know when they might be able to reopen or resume their operations. Because of this, generalising is tricky for the sector as a whole, and I obviously can't tell you all the answers or have a comprehensive list of all the things you should be doing, but I will try to give you some pointers about how you as staff or trustees of a charity might try to plan in seemingly impossible, ever-changing circumstances. I am going to focus more on the shut end of the spectrum, i.e. those where the income has taken a severe hit and the way you operate is likely to need to change in the future as lockdown lifts, rather than those charities that have managed some degree of business of normal. But the general principles are the same before half my audience decides it isn't for them and logs off. It's much easier to sneak out of a webinar than it is out of a seminar. I think one of the most common things I've picked up over the last couple of months is that no one is unaffected. So whatever issues you are facing, rest assured you are not alone. So this first section is about creating a plan. It does feel a bit late in the day to be talking about creating a plan, as you've already had to deal with the immediate planning forced on you back in March, in whatever form that took. So I'm really thinking here about planning, working towards a new normal as to what life might look like through and after lockdown, and accepting that in most cases things aren't going to go back immediately to how they were before. We're going to look at financial planning, primarily because this webinar came about when I was asked a few weeks ago around whether we could do something around cash flow planning for smaller charities. Of course, there will be a whole host of operational and people issues running alongside this that you will be far better placed to consider than me. And the financial planning will just mirror the operational one. The first in this series of webinars was run by my colleague Steph Davison from our corporate finance team, and she has already looked at cash flow forecasting and some of the finance options that might be available to primarily commercial operations. But if you haven't seen that webinar and you're interested in detailed cash flow planning, I would recommend it to you, and it's available on our website to watch later. I apologise if there's some duplication here around some of the things that Steph was saying, but we're just trying to put it into not-for-profit language for those unused to forecasting. So the first thing we're going to do is starting with income, and just try and think about how you can break that down to make it into an easier to follow plan. What are your main income streams and what's happened to them since the end of March? Start by listing them all out alongside how much you got from them in the last financial year, and then what you would have expected them to look like in this financial year pre-COVID. So you might have had a grant, but you knew that finished at the end of March, so that won't be there in this year, so you can ignore that, for instance. What at this point do you realistically expect to happen to each of those income streams in turn over the next 2 to 3 months, and then perhaps 6 to 12 months out? If you break it down and tackle each one separately, it's much less daunting than trying to put a finger in the air and look at income as a whole and say, oh, well, it might be down 50% or 25%, but we're not very sure. For example, if you have 3 charity shops, they're obviously all closed at the moment, you now expect that they're going to be allowed to open in the middle of June. But sales will probably take a bit of time to recover. People might be unwilling to come back to charity shops just yet. So you need to change and you might need to change the way you operate in them for social distancing. So you might take last year's number and take off 3 months trading for the closed period, and then perhaps half the income for the next 3 months, and then assume that from October onwards, things and sales levels should be more or less back to where they were. That's one example. You might have a grant for delivery of a project that you haven't been able to start to deliver. I presume by now that you've probably spoken to the funder and agreed either that they will pay the money anyway and that you can delay the delivery of the service, or you can divert the money to something else that's more pressing, or they might have kept hold of it until you are able to do the activity, in which case you can feed that in as well when you know when you're going to receive that cash. Think about how quickly you would expect the various sources of income you have to bounce back and what you're assuming in coming up with those numbers. Try and make a note of those assumptions as you add the numbers to your model so that you can revisit them later. And if you are trying to explain your numbers to the trustees, you can set out exactly what you've assumed and they can challenge you on those assumptions. If your assumptions are based on current government guidance about when things might happen or ease, then obviously keep it under review. If it's just gut feeling, who can predict what public donations might do, for instance? What can you do to find out how realistic that might be? Think about contacting some of your users and surveying the people who normally donate to you about their pattern of giving, or talking to others that operate in a similar way to see what they're seeing and see if their thinking is the same. What's the earliest you might expect to be able to reopen or restart activities? Be realistic, not optimistic. And how will social distancing impact on what you may be able to do, when you may be able to do it? and what income you may be able to generate from doing it. So once you've covered off your income, move on to look at your costs, and I'm sure you've already done this for the closed period, if indeed you are closed. Look at the assumptions you've made into income and try and mirror that into the cost base. So what costs are fixed and you're going to have to pay them anyway, and indeed you have been paying them throughout. So you can feed those into your cash flow model as things you're going to be paying every month regardless. Then look at your flexible costs, and some of these might be staff costs. You might have had staff that are furloughed, and you will already have looked at these back in March and made some decisions about how you can cut those costs to the bare bone while you are shut, but they do need re-looking at as you start to reopen and restart your activities, as to how quickly you bring people back and when you start to re-incur each of those costs. Try and phase the restarting of the cost base to match the income where you can. It sounds fairly obvious, but the temptation is to just reopen everything and get all the staff back and then realise that you haven't got enough income to cover it because the income is lagging behind in recovery. If you've got furloughed staff and you're going to need to bring them back into the charity gradually, what will that cost? The government has now updated its guidelines on furloughing and how that will unwind through the summer months and through into the autumn to increase the burden on the employer. So if you still can't open parts of your operations, you may need to start paying the staff for at least some of the time before you can reopen, and how will that impact on your cost base? If you are going to need to operate differently for social distancing or other considerations, is there a cost to that for either equipment or people? How does continued social distancing impact on how many people you can have in your service at any one time, for instance? Or do you need more staff in place to manage the space than you would have done previously? I'm just going to look at a quick example. I can get my pointer to work. Yes, right. So this is a really sort of very simplified model, and you'd be much better off using the one that's on our website that Steph's created. But this was really just for illustration for what I was just talking about. So you've got some grant income that's been delayed. It's now going to start in month 5. So month 3 is, I'm assuming, is June, with April and May being 1 and 2. Your charity shop might reopen in June and start generating income from the beginning of July. Might only be half of what it was for the first 3 months, and then perhaps back up to where it was by month 7. Donations have held up to date, but actually more people are starting to feel the pinch. People are going to start losing their jobs, so donations might tail off. And then you've had some furlough grant to cover some of your staff costs. That's been coming in nicely each month, but will start to fade away through to the tail end of the year. Then for expenditure, you've obviously got your fixed costs. They stay the same throughout. Your staff costs are sort of minimalised at the minute because you've got some staff furloughed. They will start to increase as you ramp up operations and start opening your shops. If you've got a great delayed grant project that can now start again here, these are the staff costs that are associated with running that project that will then carry on over the next few months. And you've got other variable costs that will obviously go up and down. Some of those are connected to that grant that you've had in up here. So that gives you total income and expenditure over the period with an expected surplus or deficit for each month. Obviously, when you are forecasting this, you need to be quite careful on the timing of payments. So when you actually expect the money to come in or actually go out, this is cash rather than trading position, if you like. So you were lucky enough to get a rates rebate grant in March and April. You've still got a bit of that cash left, and you've got brought forward cash at the bottom here of £2,000. So with your surplus and deficit through June, that's going to leave you with a cash shortfall at the end of June, running through into July, that then recovers just about, but it is quite tight. So assuming you are looking at a shortfall, then the next step is to think about how to fund the gap. Are there grants or loans that you haven't previously considered that might now be available to you? If not, how will you reshape your operations to be able to operate within the income that you have got, that you know you can secure? There have been various schemes announced during the crisis to assist both businesses and charities with cash flow shortfalls. both grants and loans. Some of the more commercial solutions were covered by Steph's webinar, as previously mentioned, and there are signposts to charity finance on the Charity Commission website and in the bulletin that we put out last month. There's also a decent list on the Good Finance website, and since the bulletin went out last month, we learned that Social Investment Business have also launched a resilience and recovery loan scheme. So it is worth looking at all of those once you have a plan about how you will reopen, what services you will be able to deliver, and what funding you might need to be able to achieve that. So next we're going to look at what happens if you get the assumptions wrong. Actually, it takes 6 months, not 3 months, to get back to normal. You find that you really need an extra staff member at all times to make social distancing work, and that's obviously got a cost attached to it. What does that look like, and how does that change your plan around what you can afford to do? Does that indicate you might need additional finance, and can you apply for it now, just in case? Try and keep updating a few scenarios as things change, because there won't be one right answer, because there are so many assumptions that people are having to make in all of this. Hopefully reality will end up being somewhere in between the various scenarios that you've modelled, and then from that you can manage and formulate a plan that works. Remember to keep feeding that into your cash flow. But does it stack up with the cash you have access to? Can you afford to run at reduced capacity? If not, can you get grant funding to bridge that hopefully short-term gap between restarting and being able to cover all costs in full from the income that you can generate? Are there funds that you can apply to now and have in place for when you need them, even if you don't need them yet? Remembering that there is always a lag on any kind of application for finance. So if you've got a plan now that shows it in the autumn when you expect to be back at the new normal of full capacity, you're still going to struggle to make that a viable operation. You could be applying to grant funders now to say, look, this is really valid work, but we can't do it just yet, and we need more money. So get those applications in whilst you've got the time to think about it. So what does your plan look like? Cover that. Now you need to link all of that to a timeline and make sure the practicalities and the cash requirements are in sync. You might not know exactly when you'll be able to restart operations, but you can plan what needs to happen before you can restart, and then what will happen gradually after the restart. So even if you have a kind of time zero point that can move in reality from mid-June to early September, what needs to happen either side of that, and what can you be doing now to make sure that you can respond quickly to get the operations back up and running as soon as you are allowed to do so, and it is safe to do so. So work back from being able to restart activities. So for instance, do you need to reorder some stock to be able to restock the cafe or the bar that runs alongside the performance venue? What kind of social distancing do you need to put in place, and how can that be managed? Do you need more equipment? How long does that take to come? Do you need to be ordering it now? Have you got the cash to be able to order it now? If you're going to need to restructure to make this work going forwards, when does that need to happen? Is that going to need to happen before the end of the furlough scheme? Because realistically, it's not going to work post-furlough with all the staff back. Or are you prepared to, have you got enough cash to be able to give it a go and then make those kind of decisions later if the income doesn't bounce back as you hope and anticipate? So when might you need to start communicating with staff? Think about your beneficiaries as well in all of this. If you have closed or operations have ceased, how are you communicating with them around what's going on and what you're planning? Who is going to communicate with them and let them know what's happening, so that when you do reopen, people do know that you're reopen and it's safe to come back into your facilities and operations? Have you got the staff in place to do it? Do you need to bring people back from furlough sooner to be able to gear up to reopening? And then if something doesn't happen as expected, how will that be picked up and fed back through the plans so that everyone knows what's going on? So create a timeline and make sure that's communicated with the board so that everybody is clear around when decisions would need to be made. and nothing is left too late. So as time passes, uncertainty will give way to more certainty. Dates around when you are allowed to do things will crystallise. So make sure that your assumptions and timelines are still valid. Does it still work? Base your assumptions on what you know, where you can. So 2 months after lockdown, what evidence is any, if any, do you have about income streams holding up? Are your donations more or less where you thought they would be and where they've been in previous years? Is there any evidence that people are starting to hold on to their cash rather than charitable giving? Or is charitable giving actually up, depending on what your operations are, and people are keen to support the value and good work that you do? I know some organisations are using the time now to communicate with their youth groups about what they would want or expect to see post-lockdown. So is now the time to be looking at what the new normal might be? Where can you target your efforts if you're only going to have a limited resource for the most charitable benefit? Some of this feeds into the next section on governance, but just remember that some of the decisions you're going to be making are business critical and may need board approval. So I think we all accept now that there's not going to be a sudden and instant return to normality. It is going to look different in whatever form your operations take. So try and carry out research now as to what your new normal is going to be. How will people feel about coming back into your service? What can you do now to put in place to mitigate any fears people might have? Schools is a classic example this week, with lots of parents keeping children off because they don't believe it's safe for them to return. So you need to build confidence in your users that whatever plans you have are safe and are in their best interests. Try and communicate with your beneficiaries. Do you need to adapt what you do? How are they feeling about the services you offer and what they might need in the future compared to what they thought they needed in the past? Try and keep them engaged while the services are not running. Send out newsletters and updates and just keep people on board and try and support them as best you can in whatever way you can. So we're going to move on to look at governance briefly. So all of that will have created a lot more options and uncertainties around choices to be made about what you can do and afford to do with available cash. In deciding how to proceed, your starting point should always be what's in the charity's best interest. There are likely to be a number of factors that you'll need to take into account to judge this, including the trade-off between reducing costs in order to be there to support users in the future and spending the cash you have to meet the immediate needs of your beneficiaries, with the possibility that in the future the charity will then have to reduce its services or close entirely because it will have run out of resource. Are you able to safeguard your users and protect them as the charity goes through potentially significant change? If you decide you need to sell investments and other assets at this time, you may raise significantly less money from their sale than you thought you would if you sold them a few months ago. That might be in the charity's best interest. It may be the best option available for meeting urgent needs to help the charity to survive. But you do need to have clear reasons to support that, and borrowing against the assets while the asset values recover may be a better option. Are decisions you're making within your charity's purposes and any requirements of your charity's governing documents? So if you are looking at lifting restrictions on assets or disposing of land, have you checked whether you need charity permission approval, for instance? If you look back 3 months, think how the world has changed. On the 4th of March, we weren't even approaching lockdown. I'd just arrived back from a trip to Australia, and we'd held an actual charity briefing in the office in the previous week. If you look forward 3 months, what are you now envisaging your world would look like by early September? A lot of charities operate on a quarterly reporting cycle to their board. So if you were previously reporting quarterly to the board, is that now enough? And B, is it fit for purpose for them to fulfil their duties in this very fast changing world? How can you make the process more streamlined? It's worth revisiting any scheme of delegation that you might have between the board and the staff team as to who is deciding what. And that's not to take decisions away from the board, but just to take business critical decisions, maybe agreed with the board in advance, that then the chief executive and staff team can implement as and when the need arises. Because with the best will in the world, you're not going to get all the board together on a weekly basis to make some of those decisions. How can you make the process more streamlined? So are there specific things that you could delegate from the board to, for instance, the chief exec and the chair of the board, pre-agreed by the board, if you like, just to be implemented as and when it was needed? Do you need more regular meetings? Is quarterly actually enough? And I think a lot of charity boards have probably reverted to more regular, shorter meetings through this crisis. You do need to bear in mind, though, that servicing the board takes time. And if you've got a stretched staff team being pulled in all directions, trying to keep the show on the road, adding more board meetings with a lot more paperwork to service that board might not be beneficial. So it's just about getting the balance right. Use Charity Commission guidelines. The Charity Commission has published 3 updates since the 23rd of March. The first dealt primarily with financial difficulties caused by COVID-19 and was followed by a more general publication on the 7th of April. And then in May, it's issued an alert about increased risk of fraud in the wake of the crisis. The more general one from early April is probably the most useful to trustees, as if you go onto the Charity Commission website to read it, it does have links to lots of other areas that might be of interest, which include government financial support for charities, AGMs and other meetings, and guidance about postponing or cancelling meetings, guidance about holding meetings online or by telephone, use of reserves and restricted funds, further guidance on managing in financial difficulties, reporting serious incidents to the Commission, keeping people safe, and guidance on fundraising and making coronavirus appeals, amongst other things. Make sure you document decisions properly. Virtual meetings should still have minutes, even if it's just the list of agreed actions. Some of the decisions you were making as a board will be business critical and probably made at more speed than many boards are used to, with potentially less well-informed background information. So documenting that you believe you are acting in the best interest of the charity and its beneficiaries by making these decisions is key. So the final section of this webinar is looking at reporting. We do expect to see enhanced reporting on pretty much all 2020 financial statements prepared and signed from mid-March because of the impact of COVID. Charity reporting is always about transparency, and I think any financial statements issued now that make no mention of COVID are failing, because I don't think there are any charities that won't be affected in some way, shape or form by the current crisis. So the main areas I would expect to see sort of additional words in the trustees report. First section is obviously achievements and performance, and that'll depend on when your year end falls. March year end, which is probably the majority of you, might only have been impacted by a couple of weeks, but you still will have been impacted in some way. So don't be afraid to talk about how COVID has impacted on what you do and how you've managed to adapt services or keep in touch with beneficiaries. Financial review, again, depending on when your year end is, there may not be that big a financial impact in the year that we are now reporting on, but there will be possibly a much bigger financial impact in the next financial year. For charities with investment portfolios, the investment portfolios ended the year end in March around 20% down on their values at December. So that obviously will impact with huge unrealised losses going through the statement of financial activities, which will need some explanation. I think everybody should be putting something in on going concern, setting out what the trustees have considered in forming the view that this is the correct basis for the preparation of these accounts, which by definition is that the organisation will be able to meet all of its liabilities as they fall due for at least 12 months from the date of signing, not from the year end. So if most charities work roughly with a March year end, might sign off August, September time, your financial planning needs to run out to August, September 2021 as a minimum to prove that the charity has sufficient cash in the business or access to sufficient cash to meet all its liabilities as they fall due. Now, given all the inherent uncertainties that we've just talked about in the cash flow planning section, that might not all be all that easy to conclude upon, either for trustees or for your auditors, particularly if you're looking to sign in the relatively near future. Obviously, the further out we go, I would hope there'll be less and less uncertainty and some of these things will be easier to pin down. But that is going to involve extra work to validate assumptions or to secure cash to take out some of the uncertainty, and that even if things don't go quite to plan or you don't get the income or your costs go up a bit, you've still got enough cash headroom to make those assumptions around going concern. Your reserves policy, I think, will be key within the trustees report. There may be good reason to keep higher than normal unrestricted reserves, particularly at the end of March, to see you over this crisis. And I don't think the Charity Commission would be upset by anybody holding higher than usual reserves at this point in time to see them through a crisis. If you think of a lot of standard reserve policies, say that charities hold roughly 3 to 6 months running costs, as an example, just in case there was a period where income fell away. And this is exactly what those reserves are for. So don't be afraid to use them. Don't feel that you have to keep the reserves at that level, even through the crisis, because that's really why you hold them in the first place. Do look at your designated funds. If you designated them for a purpose that now isn't perhaps the best use of them, given that the world has changed, you can undesignate them and reapply them somewhere else that's more business critical. And have a good look at your restricted funds as well, and see if there is any way you can apply them to do something else, either by approaching the original donor and talking to them about the restriction that they'd imposed, or by seeing if some of the services that you are providing actually fit within the restriction. That's covered in the Charity Commission guidance, which is worth a look if you're in that position. Plans for future period, often quite boilerplate in trustees' reports. Sometimes you only see 3 or 4 bullets about what people are aiming to do. They don't want to tie themselves in knots with great long detailed plans that then don't come off. But I do think you're going to have to cover off what you think the impact of COVID is likely to be, or has already been, by the time you sign these accounts, and how you are currently planning to come out of it. How are you already adapting, and what are going to be your major challenges? Accounting policies on the basis of preparation, that's going concern again, and just gets repeated within the accounting policies section. And then key estimates and judgments, the main one here being asset valuations. If you have a property portfolio, that's quite hard to value at March. So asset lives might be another thing. If your operations are changing, are the asset lives of your fixed assets valid? If you've got a defined benefit pension scheme, that liability is also likely to be impacted at March. And then depending on where the trustees concluded on going concern and the degree of uncertainty around that, it's also possible that the audit report will contain clarification around the going concern assumption, and at least may draw people's attention to the material uncertainty outlined elsewhere in the accounts. In terms of timing for reporting, you are able to apply for a 3-month filing extension at Companies House if you are a company limited by guarantee. It's not automatically granted, so you do have to apply for it, but we haven't seen any instances of them not granting it. The Charity Commission is also accepting late filing, although they do ask charities to file on time where they can. So what we're seeing from our experience is that the impact is hugely varied. The huge variety has struck me the most, proving that you can't generalise with the sector and that there's no standard right response. as I said at the start, some charities have seen a huge demand and had money seemingly thrown at them to support their communities. And others have seen income drop to nil overnight, but still have sizable costs to be met. Some have been caught in between, sort of required to stay open, e.g. to provide childcare, key workers, when it's not necessarily viable to do so. I have seen much greater involvement of boards to support management and work together to address issues as they arise and to formulate new plans. Getting a clear communication trail and decision-making structure in place to allow everyone to be more responsive has been key, as decisions often can't wait till the next meeting, and to avoid CEOs of smaller charities feeling isolated and firefighting by themselves. This isn't suddenly going to go away, and these ways of working and the impact are here for the foreseeable future. So those that are unable to adapt and adapt quickly will probably not survive. And on that cheery note, that's the end of the webinar. Crystal balls are sadly not available to purchase on the UNW website, but we can help in other areas, such as access to finance and queries over the ever-changing job retention scheme. So if you do want further advice, feel free to contact us. Just before I hand back to Charles to assist with the Q&A, once you exit the webinar, Zoom will open a page in your browser containing a link to a survey for today's presentation. It won't take you longer than 2 minutes to complete, and we'd be really grateful if you do, as your feedback allows us to continually improve the charity events programme. We'll also be sending emails containing the survey for attendees who are unable to fill it online. I would be really grateful if you could respond, particularly to inform what we do next in terms of webinars or appropriately socially distanced smaller gatherings, perhaps roundtable discussion forums on particular issues when we are allowed. Charles, I hope is now going to rejoin. Yes.
Well, thank you very much, Anne. And I was about to say we've got just 2 questions, but in fact, there's another one that just literally popped up as I started speaking. So what I think I'll do is I'll ask you the first of the questions I've got already, and perhaps while you're thinking about that and answering it, I will read this question that has literally just appeared at the foot of my screen. So this first question, Anne, is picking up on your point there about the filing extension for a charitable company limited by guarantee at Companies House, where they've, as you said, extended the filing by 3 months. And the question here is, with the trading subsidiary, does the trading subsidiary still need to pay over the gift aid to that charitable parent within the 9 months of the end of its accounting period to qualify for tax relief, or is there sort of like a similar extension? So while I'm leaving that one with you, I'm going to, as I say, have a look at what this question is.
Well, Charles will probably correct me anyway in a minute, but I'm not aware that there is an extension with the revenue on that one. And I would think that any delays to filing in charity and corporate accounts are generally caused by just crystallising of uncertainties post-year end, rather than anything in the numbers to the year end. So I would imagine you could finalise the gift aid payment on the numbers you have, and that the numbers themselves aren't likely to change between 9 months and 12 months post year end. And what might change is just the wording and how you're telling the story and your conclusions on going concern, unless you have any particular asset-based concerns. And I can't imagine that you would have very many of those in a normal trading subsidiary. So I would say you should still aim to pay it up within the 9 months, unless Charles knows differently.
No, I would agree with Anne's comment there. And of course, the subsidiary has still got the normal payment date, 9 months and 1 day after the accounting period. So you've got that issue to address if you haven't actually dealt with the gift aid payment. So no, I'm not aware that HMRC have given any extension. And of course, in terms of filing the corporation tax return, you've got 12 months anyway. So in a way, what's happened with Companies House extending their filing deadline by 3 months it's actually brought it in line with the deadline where you need to file a corporation tax return, either for the trading subsidiary, which you'll be doing every year, or just occasionally, of course, you know, the charity itself has to file a corporation tax return. Right, I'll move to this question here, which is, I'm reading it out. Here we are. Anne, what is your practical advice to trustees who are nervous about their ability to sign off the annual accounts on a going concern basis?
Probably the same as auditors nervous about signing off accounts on a going concern basis. I think you just need to test the assumptions, and it's about having reasonable confidence in the assumptions that are being made. So if you're assuming that income will fall by X%, then by the time you sign off, I would hope you'd have at least a few months to test whether that assumption looks like it might be valid in the longer term. I mean, it depends on the timing. So if you need to sign in June, that's obviously much harder, I think, than it's going to be in December. But then it depends on the impact, what the impact has been on the particular charity. So I think that's quite hard to answer as a generalisation. So with trustees, it's around getting enough comfort on the headroom that you've got and the leeway. So if that particular income stream doesn't hold up, are there actions you know you can take to cut costs and still sort of maintain within your cash headroom? Or are there other income streams that you're still looking at that you reasonable confidence you might be able to access? So it's getting the balance between all the different things at play, I think, just in practical terms. There's no easy answer to that because it is going to be a challenge for everybody.
No, I mean, just you know, speaking as a trustee myself, I mean, really, it's a case of what is the situation at the time. I think when you're actually having to sign off, and you might be having to sign off because, for example, you might be thinking of the period that you've already traded through. You might be a charity that's looking to make a claim, shall we say, for theatre tax relief or one of the other reliefs that are available, and obviously you want to sign off and get the accounts and the return in because you want to get the money back from HMRC. So really, I think it is just a case of as we've always said previously, have you got sufficient evidence? Are you acting in a reasonable and prudent manner? And if the worst comes to the worst at a later date, which you know could happen, nevertheless, when they're then looking back, can you demonstrate that you've behaved properly and reasonably, etc., etc. So yeah, actually, the final question I've got is actually sort of a bit following on from that in a way, Anne, and this is again on the subject of going concern, but looking at it from the other side with the funders, perhaps, of a charity. And the question here is, what do you think the responses of funders will be to a modified audit opinion on going concern on a charity's accounts?
Well, I don't think they actually know yet. I think historically you would say they probably would be a bit wary as to giving money to something that might not still be there in 6 to 12 months. But I think in the current situation, they're going to have to be more flexible. And I think if it's a current funder that you're working with, you'll be talking to them anyway, and they'll understand the situation, and they'll probably try and help you through it, I would like to think. And if you're a charity applying for new funds, I don't think funders are going to be surprised to see it, and I don't think it's going to be quite the black mark that it might have been in the past. But that comes back to making sure you explain it properly and set out exactly what you have done and exactly what the uncertainties are and what action the trustees are taking to try and mitigate those uncertainties and ensure that the charity will still be there.
Yeah. Right. Well, you know, I was about to say that was all the questions. No, sorry. I thought there was another question, but in fact, it was just a supplementary comment from the, one of the questioners before, which
Okay.
we can gloss over. So we haven't got any more questions, and I think therefore we'll pull proceedings to a close. I would just like to take the opportunity of mentioning, though, with regard to the Coronavirus Job Retention Scheme, the CJRS, those of you who've got staff furloughed will be aware that there have been some more recent announcements from the government, and details of those, if you haven't already seen them, are on the UNW website, and there will actually be further guidance issued by HMRC on the 12th of June. This is to do with some of the more recent changes that have been announced regarding furloughing and when you can furlough somebody by, and the claims and all the rest of it. So just to alert you to that if you're not already aware. So it only remains for me to say big thank you to Anne. Thank you also to our backroom team of Richard, Max and Daniel, who put all of this together. Thank you to all of you for attending. I'm sorry we can't see you. I mean, I can see that most of you are still there because the numbers haven't gone down dramatically since we started the Q&A session. But just remind you again about the feedback form. That would be really helpful. And I'm told that in addition to having put a couple of suggestions, we've left a big open space where you can put any other ideas for topics that you might like Anne and others at the firm to cover at future charity sessions. So with that, I will bid you all a good day and close the session. Goodbye.